My next guest is the executive chairman of BJ's Wholesale Club, a leading warehouse club operator with stores on the East Coast. I have to admit that I am a big, shopping club magnet. I love to hang out in shopping clubs, so I need to go visit the BJ's. In 2011, BJ's was acquired by private equity firms and went through a period of transition before becoming a public company again in 2018. Executive Chairman Chris Baldwin is also a member of the executive committee of the National Retail Federation, the world's largest retail association. So good to be with you. I hope you're doing well wherever you are. And I do want to visit one of your stores one day. I've seen them, but I have not been in one before. But tell us a little bit about the journey that you went on, and I'm going to ask you because you were the CEO of this operation, and you're now executive chairman. So your understanding of the dashboard of these various elements is large. And I think what we're trying to do for our audience today is give them an understanding of how these pieces work together. So how did private capital matter so much in modernizing, in helping BJ's to survive?
Sure. First of all, Steve, thanks for having me. It's great to be with you and your audience. The BJ's story is, while I can make it complex at its simplest level, it is a story of investment and the opportunity to make that investment pay off. Overall, the company was public from 1996 to 2011. It was taken private in 2011. I joined in 2015, where the company had gotten a bit off track, and we were able to make substantial investments in the capabilities that were required to make the company a successful public company again. And in 2018, when we went public at about $17 a share, and we are continue to be a healthy, vibrant, and growing business in a very complex world we all live in. But in our case, the private equity industry was a critical part of making the investments necessary to get the company to be competitive again, and they were terrifically supportive through a very challenging time in our company. And on the other side of it, we have done very well in the public markets.
When you kind of look at the issue of private capital and how it fits and flows, what does it need that it doesn't have today, or are things just fine the way they are right now? Don't mess with it.
Yeah, my sense, Steve, is that just like all business models, the world we're living in requires all of us to step back and be a bit reflective about how we can make the world a better place. I think just like public companies and the BRT's work, private equity has done a very good job of attempting to leave businesses better when they leave them than when they got them. And in our case, I will tell you that our ability to grow has been a great job creator in the United States, and other private equity businesses are just like that. So I do believe that the world of ESG is critically important for not only public companies, but for private equity firms as well. And I've seen both up close and personally. And I believe both are attempting to make the world a little bit of a better place, because I think the situation we're dealing with in our country and around the world requires it.
I think one of the complex questions out there, I just admitted being a fan of, warehouse stores, right? That could get me in a lot of trouble. I also love, where I have a place, Chestertown, Maryland, which has lots of, little shops and has blocked warehouse stores, around that county. So I get that there are trade-offs in ease and convenience, and you can see the benefits of both sides. But when you sort of look at some of these big questions out there, you're on the National Retail Federation. You look at what's going to other large stores with brick and mortar operations and how they're going to survive. This is a transition point. It feels like a hinge point for lots of kinds of companies. And private capital does play a role in that. But I mean, when you look at it from your dashboard, just largely about how the economy is going to adapt to COVID-19 and where we're going and how capital can help those inflection points, because it's not going to look the same as it did 4 months ago. I would assume that we're going to see major changes. And some people are going to applaud those, and some people are going to be angry about them. But how do you see it?
Yeah. We are certainly at an inflection point on a variety of dimensions. And I believe the private equity industry specifically, and the retail industry generally, can be a source of job creation in this country. And I believe, as an example, Steve, to give you some perspective, 32% of American adults started their working lives with a retailer. The way we talk about it within the NRF is really simply, we teach America to go to work. The place that I believe we can make a real difference is giving people an opportunity to enter the economic ladder. In our company, about a third of our general managers, probably the most important job in our company, it's certainly not the CEO. A third of those people started as hourly employees. That would be true for companies like Kroger or Walmart or Target. But if you think about the economic impact we can have on those families by helping them move along in their career in a role that generally doesn't require a college education, it's a great opportunity for people to move up the economic curve in our great country.
I want to go to a question in a moment, but I want to ask you, and this probably be unfair, how much pain do you think is ahead for us as a country with what's happening with COVID and what you see happening in the retail sector? 40 million people unemployed, debates about race, police brutality. I mean, this is a unique set of storms hitting once. Yeah. I mean, you're one of the Wizards of Oz, as I call it. You see a lot. Do you? I mean, most people say, "Oh, I'm optimistic," but I mean, be realistic for a moment. What do you see?
Yeah, the biggest economic concern I have in our country is the ability to get small business back up and running, Steve. As you think about it, if you and I owned a business, that was closed for the last couple of months, we'd be reopening sometime soon. You pick a date, to what are likely higher wages, what are likely limits on how many people we can have in our business. If we were a restaurant, we would be dealing with higher protein costs. And then we would also be dealing with the impact of the cost of PPE. As you think about retail, 96% of the retail businesses in the United States have less than 50 employees. But as you think about the consumer-led economy, 70% of GDP is consumer spending. We have a responsibility as business leaders, I believe, to help small business get back up and running. And I believe the government can also help in that regard. Because absent small business, this country will have more pain than it can endure. So in particular, I think the legislative focus should be on getting small business up and going, because that makes for a better America in the future.
I'm so glad you raised that. It's a vital piece, and I know it's going to be debated in these next 2 weeks, particularly in the Senate. We have a question for you from Cody Carbone, if I'm saying the name right. Cody?
Good afternoon, everyone. My name is Cody Carbone in the Office of Public Policy at Ernst & Young. My question today is, how do we build public trust in private equity? Do you think this is more of a marketing issue than a policy issue? Thank you.
Great question. Marketing issue or policy issue, building trust in private equity? I should have started my questions to you with that.
Cody and Steve, I think it's a very good question. I think this debate is best had on the facts. As a practical matter, a very large percent of public pension funds in the United States invest significantly in private equity. And private equity is also a very, very large job creator in the United States. There are certainly some bad stories in private equity, just like there are in public companies. But I believe if we had this debate on the basis of the facts, the conversation would be a good one. And the fact that so many pension funds in the United States so aggressively invest in private equity and the returns that I have seen from the industry would indicate that the returns those pension funds have gotten are in the mid-teens, the low to mid-teens, to be fair. We have made a terrific contribution to those folks around the country.
Well, Chris Baldwin of BJ's Wholesale Club, I really look forward to visiting you in one of those clubs when we're allowed to do that. I guess we are with masks and whatnot, but I would love to see you in person. Thank you so much for joining us today and for your insights, and I hope you'll be back again.
Steve, thanks for having me.